Good afternoon. This is Ron Brown. It is Friday, the 22nd of September. It is 2:30 p.m. Central Time. There's a half hour left in the trading day. It's been a volatile day. Market opened strongly, traded probably about 1% higher on the Nasdaq, and then sold off, came back to even, and now it's rallied again. So it's day trader's delight. But anyway, I want to show you something that is unique to HGSI, and over the next several weeks, I'm going to be showing you several things that have been incorporated into the program. So, once again, this is just a continuation of unleashing the power of HGS Investor software. Once again, here's my standard risk disclaimer. Any stock index or ETF mentioned in this presentation is not a recommendation to buy or sell. All trading strategies are used at your own risk. This week I'm going to discuss some scans that I put in a few years ago, and I really haven't given them a lot of attention, but I'm going to today because I think they're very useful, and they're under my gurus, VPA gurus, Wyckoff, Williams, and Karthik Marar, and I'm going into Wyckoff. Now, this is not, of course, the complete Wyckoff theory for the purists. This is strictly based upon demand and supply and things that I look for. Now, I didn't just make this stuff up. I actually got the information out of a book called Wyckoff Strategies and Techniques by James O'Brien. He's been a long time Wyckoff practitioner, and it's a book that's available out there, but I took the information out of there and I applied it to HGSI, and I don't think you can do this with any other software out there. HGSI is a program that's been around for a while. It doesn't have all the bells and whistles of some of the more recent programs, but it does a lot of things that no other programs can do. So that's why it's worth putting up with downloading and updating on your computer and so on, because it's got just a tremendous amount of power, and I'm going to show you some of that power today. I'm not going to cover all of these because there are several, but I want to get started with some, and I'm going to talk about demand, higher volume, wider spread, and here is the end of day, and here's intraday, and I'm going to just go to the intraday for now. Now, what are these charts up here? Well, this is one of my basic charts that I use all the time for intraday. This is the weekly chart, and this is what I call my demand charts, Wyckoff charts, and you're going to find these in my files under the number 9 folder, demand, candlesticks, or just bars, either one. But what they do is they give me a visual reputation of when certain conditions are met with Wyckoff. Now let's take a look at this here. Well, first of all, I'll go in and let's take a look at the filter. It's kind of a complicated filter, and I'm looking for the spread, which is either above average or wide, and it does not equal any of these other fields in here. So that's why I get the demand, or where I get the demand wider spread on higher volume. This is other stuff is really not necessary. This is the meat of the filter. So I'm going to cancel this, and then if you look over here, this information here in my views is what I call the Wyckoff, or these are the Wyckoff columns. There's volume, spread, and close, and you can see it says very high, wide, and very high. Now this is last night's information, so if I just remember that very high, wide, and very high. If I bring this up and you look right here, very high. Why don't I bring an arrow up here to point this out? Very high, wide, and very high. So that's last night's information, which would be referring to this bar right over here. And notice these nice VPA signals. This stock has been under accumulation for several days because selling pressure has come off of this, and now look at the volume that came in yesterday and following through today, and this is on Friday. Now I want to clear my screen here, if I can remember which one it is. There we go. And minimize this. So I have the daily chart here, and I can see how heavy the volume is today and if these stocks are following through or not. If they're following through, they're going to be in this column, the intraday percentage, one-day change, and here is the range. They're going to be at the near the top of the column if they're following through sharply. This is a specialty pharma stock. There was no VPA signal yesterday, but the day before there was. But even without the VPA signal, I knew this stock had a lot of buyers because of the Wyckoff information here. Now, notice over here in this chart. Now, this is a weekly chart. This is a daily chart. And what I did is I went in and put visual filter backtest filters attached to each of these. Now, I'm going to right mouse click on here, and I'm going to go down to the edit indicator. And if you do that, it will give you an explanation of what these different colors are. And demand, higher volume, wider spread, dark green. It's a visual filter backtest. Now, if I go to the yellow edit indicator, and I'm looking for the yellow, it says narrower price spread and lower volume, which equates to lack of supply on that day only. Now, this black line here represents the groups. So you can see here this was falling and the group was going up. But down here you can see there was a dark green bar, and if I click on that area and then, let me do that again. Go over here, it tells me the volume was very high, the spread was wide, and the close was very high. So in a falling market, there was also stopping volume on this. So here is where we're getting money flowing into this stock after this sell-off. This is where the smart money, or the deep pockets is probably a better word for it, start stepping in because they see value in it at this point. Now maybe they knew something was going to come, because over here you can see the big gap up, and that was probably on volume. But what I can do with these charts is I can just look and see what signals were going off and what the group was doing at the same time. And by clicking on them, I can see what the signals were that day. So I'm clicking on blue. I know it's less than average or below average volume, or less than average volume, below average spread, and close very high on the blue. And you can see that right here. Now if I go to the edit the indicator, that information will also be in here. Also, I put most of them across the top here. I don't know if I got everything, but I just generally, if I'm unsure of what the color means, I'll click on a bar and then edit the indicator. Brown bar, high volume, below average spread, high close. So this spread is below average when compared to all these. Now, the mathematical formulas are in the help file if you want to know exactly about what, what's a normal spread, or what excessive volume and so on is. But it's very helpful. Like coming down here, you can see, as I pointed out, where there was accumulation. Now here there were VPA flags, but I didn't get any Wyckoff signals in here until this one occurred right here. And that's, once again, edit the indicator, yellow, narrower price spread, lower volume, lack of supply. And that information is up there also. So it's very helpful. Just because there's a bar, though, doesn't mean they're going to go up, but it's telling us what's happening on that specific day. Now, as with all my views, I have an end of day and an intraday. and they are sorted on different combos, of course. So a demand at the end of day was all of these stocks. Let me open this up if I can get to that window. And you can see that every one of these were meant the filter's qualifications. Now, just because it did that doesn't mean they're going to follow through, obviously. That's why I put the intraday in here, because during the trading day, if you're running Thinkorswim in the background, you can see immediately which of the stocks are following through and which are not. Now, if I go back to the end of day and disengage the combo, wrong thing. Disengage the combo, then these stocks will stay in this order. So I'm going to do that and then go down to intraday, and then I can see right here in this column, notice that the stocks did not change position, which one of these are following through. And you can see that a lot of them didn't follow through today because now it's another down day again. I said the market had bounced. Now it's taking out the lows as I'm talking. Very dangerous market, only for day traders or long-term position traders. So I'm going to re-engage the combo and sort on it, and you can see now that the stocks that are strongest come to the top of the list. That's why I have end of day and intraday, just to make it convenient for everybody. So let's take this down. What's this stock? It's a $10.29 stock. I'm going to close this for a second. When you have three charts up, it takes a little while to respond, especially when you're recording. But let's look at this stock here. Now you can see that there have been several accumulation days on this stock. The weekly chart shot up here and then it backed off, but there was accumulation here because it didn't fall back. And then last week was an effort to rise this week also. Now let's look at it here. Here is the signal from yesterday. And if I make this full screen, and let's get that arrow back up here again. Volume above average, spread was wide, and the close was very high. And you can see that the trends were all up on this. And this is what is corresponding to this over here. Now today, if I clear everything out of here and go back and put it on today's, this is giving me what's going on right now. Above average, widespread, close very high, bullish. We have an effort to rise and it's cleared resistance on here. But this is a place down in here where we want to start looking for it. Not up here. Your exposure, I mean, it could keep going. It's outperforming its group. The group is going down. It's outperforming the S&P. But much safer to start looking down in here when we're getting these VPA flags. And this bar right here, you can see it says spread is wide. The volume was less than average, but the close was very high and an effort to rise. So you can prospect for these either with the Wyckoff method, or you can use VPA or use a combination. That's the best way to go. Now on this one, this is where the weekly chart, this is broken out to a new high. When volume like this is coming in on a weekly chart, there's a tremendous amount of demand for some reason, and then it digested it for a while. Okay, now here, looking over here, you can see on this one right here, which corresponds to this bar right here. Let's see what we had on that day. Wide, very high, low volume. That's right here. Volume was extremely low, especially because it's been overshadowed by these other volume bars. I don't cut these volume bars off because I want to see what the demand is. So let's just look at this. On this day, right here, and if I go down and say edit the indicator, I'm looking for light green. wider spread on lower volume, which means lack of supply. So there was lack of supply here. There was also a VPA flag, strength seen returning. The next day it turned into a dark green bar, closed near the high, and there is another VPA flag here. So right here, even though the group was going down, you could see there was accumulation in here, and it would have shown up in this scan, demand bar. Now, this light green bar here, that belongs to, let me just bring this up and do this properly. That belongs to wider spread on lower volume, lack of supply. Now I'm going to click on this for intraday today, and you can see that a lot of stocks meet this criteria. Let's just look at the first one here. Here is the light green bar from yesterday, which was a low volume test. Look at the strength in this weekly chart here. And this right here yesterday, low volume, above average, and the close was high on a low volume test, which tells us that the green bar here, once again, you go to edit the indicator if you want to know what it is. Lower volume, lack of supply, light green bar. And here it is. That's where the filter's attached to it. So it's just a nice visual. And then when you combine this with the VPA flags, you show me another program that can do this. I just don't think it's possible. So by incorporating this into the program, and Matt gave me the ability to do this so I could, there goes the closing bell, so I could scan on these. Now I've got a lot more of these. I'll cover these in a different video, but here's demand. These are the first two, but quickly before I go, and I'm doing this on Friday once again because I won't be around tomorrow. This one is just the opposite. Wider spread on higher volume. Supply is present. Let's take a quick look at this. And you can look at this column, and the weakest ones will come to the top. They're all not going to be down, but you can see yesterday volume was very high, the spread was wide, and the close was down. Let's just take a look at this stock, and you can see what happened. This is yesterday, and it gapped down. That's quite a fall. Let's take a look at another one. Volume was high, spread was above average and down. This is yesterday, right here. Bring this up, point this out. Volume high, spread above average, closed down, bearish, and it followed through today. This is a cheap, inexpensive stock. Okay, there's a lot of inexpensive ones in here. How about this one right here? Viasat, high, above average, volume high, above average spread, and down. And communication equipment. And this is the way it looked yesterday, and there's where the signal was. The short call was right here. This is a weekly. Clearly been weak, and then you can see this bar going down. If I edit the indicator, and I'm looking for supply here. Wider spread on higher volume, supply is present. So you've got options on both demand and supply, and you can just go through all these and figure these out on your own, or I'll cover them more in other videos. I just wanted to point this out to you. It's a very powerful technique, and if you want to take the time and you want scans that are up to date intraday rather than using yesterday's, and actually both works well, because if you're looking at yesterday's scans, and let me go back to the demand scan, you know that these are from yesterday, and then if the price is up, you know they're following through. And conversely, it just works the opposite way on the other side. But if you want to find demand scans for today, you can do a full update. Now on my computer, it takes about it to run through the whole process and update all the user groups and everything takes about 4.5 minutes. And really, just start it and you can do something else. Here, let me show you how that's done in case you don't know. Update and include intraday data. And then just start it and let it run. I'll let it run. And you can see that it's going through the process here. It's updating the security list. And then here in a second, you're going to see that it'll go in and pull up the closing data for Thinkorswim. Now you can run this, say, an hour into the day if you want to see the ones that are firing signals. But that really isn't necessary because you can use the prior day's information and look for those that are following through that like I mentioned. So anyway, I'll just pause this while this updates. While I was waiting for the update, I thought I'd check out the news. You can see this from Market Watch. U.S. stocks fall for fourth day, capping off worst week for the S&P 500 and the NASDAQ since March. Very dangerous market. Be careful. Okay, so after the update, then these would represent, these columns would represent what the signals that are being generated intraday during the update. So let me minimize this. So Mondi Holdings, what is this? A 90-cent stock. I'll pass on that one. Let's go down here. Hard to find anything. Oh, I'm sorry, that's the last close net change. Here's a $54 stock. Let's take a look at it. So very, very high, wide, and very high. If I make this full screen, very high, wide, and very high. This is right now, right after I did the update. This is what is being represented by this. Now the market is closed. Had I done this intraday, any time during the day, run a full update, these columns represent what happened during that period of time. So what they represent now is what's going to happen on the overnight download. But had I done this at, say, 10 a.m., these columns here would have represented what was happening at 10 a.m. And these prices would. And then you can also go down to the intraday. And here's that stock that we looked at earlier, I believe. And you can see the demand. Volume's very high, the spread's wide, and the close is very high, and the second green bar. Let's look at one more here. Here's a, let's see, I'll try to find something. Here's a $33 stock we haven't looked at. Very high, wide, very high. It's negative on the 3-6 crossover. VPOC turned positive today. Let's take a look at it. One green bar here after falling sharply yesterday. Buyers came into it on heavy volume. Here's the weekly chart. It's a mess in this trading range, but this must have been news related and more news related today. But this would represent what happened during today's update. So bring this up. So I click on here. Very high, wide, very high, representing this bar. Now yesterday it was volume was high, spread was above average, close. Oh, I didn't click on that properly. Okay, volume high, above average, close down, sentiment bearish. So you can see that this is just a way to prospect either end of day and use the end of day information and then go to intraday, see which ones are following through. You can do a full update anytime during the day. It does take 5 minutes, maybe more. Depends on the speed of your computer. But it's an interesting way to prospect, and if you do it earlier in the day, maybe you'll catch some of these stocks before they move too far. That's it for this video. I'll be talking more about the things that you can do with HGSI that you really can't do well with other programs, and you've seen one today, but when used in conjunction with the VPA flags, that is really powerful, and I'll be looking in the future at VPA flags too, many of them. Thanks for listening, and once again, have a good weekend.